Hi, Marv Eisen here from Timeless Dollar Trading Academy, and today I want to talk a little bit about price action. We've all heard the word price action or the phrase price action in relation to trading and how to trade. But what's price action and what are you supposed to look at? What are you supposed to know about price action to motivate a trade or to give you some hint as to the possibility of a trade setup? So let me talk about that today. Now, I teach 6 trade setups, and these trade setups are really based on price action because there are only 6 price action setups that you need to look out for. And they are gap, support and resistance, trend, time and price, momentum, and candlestick. GST, TMC. So let's talk about these price action setups or these trade setups and the price actions that give rise to them. Well, first let's talk about the gap. So this is the chart from Friday, July 28th. And the first trade and the most visible trade is the gap trade. The gap, or rather where the prices closed the previous day, was down here at 45.63 and prices opened up here at 45.97. So there's a potential 34-point gap trade. Very juicy gap trade profit if it fills. That's the problem, if it fills. But still in all, it's a setup. This is a setup. Doesn't mean it's going to happen, but it's a setup that you're going to watch for. And everyone, I think, knows and understands that the gap trade is a trade that's highly likely to close and result in a profit, except when it doesn't. So let's go on from there. So after the gap, we have support and resistance. Now, support and resistance, I'm sure you understand the concept. Resistance is where prices are limited by a top, and support is where prices are limited by a bottom. So support and resistance, simple, right? Next is time and price. Time and price trades are where the market moves a certain number of points for a certain length of time, stabilizes, and then moves the same number of points for the same length of time. And a time and price trade can be seen right over here. The market moved a certain number of points over a certain amount of time, stabilized, and then moved the same number of points for the same amount of time, where the setup is actually at the point of equilibrium and the actual trade is the second leg. So next we have trend. We all know what a trend is. Trend trade is when prices move generally in the same direction for a relatively long period of time. Of course, we never know a trend is a trend until we see it in hindsight. Next is momentum. Now, momentum trades or impulse trades happen very quickly and without real warning. So they're difficult to spot. You basically have to hop on and hope that prices move in the direction that you think they're moving for a long enough time to give you a nice profit. That's momentum. And the last is candlestick. Now, candlestick trades are also easily spotted, pretty much the same as gap trades because they can be seen almost immediately. And an example would be a hammer that forms at the bottom of a downcline with a corresponding oversold stochastic. Now remember, a hammer is a candle that has a relatively short body and a tail 3 times, or at least 3 times, the length of the real body. So these are the 6 trade setups based on price action. And the candlesticks can be seen as the interpretation of price action. So how do you trade them? Now, here on July 28th, difficult to see where prices were going as candles moved. Now, generally, as the day began, there was the inclination to think there might be a gap trade good for 34 points. But of course, prices didn't comply with that. So where does that leave us? Well, we have to look for another type of trade setup based on a price action. But prices were volatile. What do you look for in a trade like this? You're looking for price action, right? As the day goes by, you're looking for price action. Remember, you don't know what's on the right side of your cursor, or the right side of the most recently formed candle, because those candles haven't formed yet. You do know what happened in the past, and that's where you have to get a hint of what to look for in price action going forward. And here's something that occurred, and I'll give you an example of a trade that worked out very well for a number of people. Here was the intraday high that was put in a little late in the day at about 11:45. Intraday high was put in at 46.16, and prices declined from there. Started to rise back up toward that level, but never quite made it. Never quite made it. High at 46.16. The high over here was 46.14 and 3 ticks, almost, well, just about a point below that. And look, there was an overbought stochastic that corresponded to this point here, to this candle over here. And remember, we don't know what's going to happen going forward, but we do see what happened in the rearview mirror, right over here. So, does it make sense to you if I tell you that taking a trade to the downside over here, hoping that prices would go down, was a low-risk trade? And the reason it's a low-risk trade, just so if you don't understand, is that prices would have to take out the high at 46.16, only a point higher, would have to take out this high in order for this trade to fail. So, in looking at this particular point of time, in terms of price action, here is where prices made a high, a previous high. And prices are going up there to test that previous high. And the question is, if they break through, well, you get off immediately, lose a point and a half. Nothing terrible. But on the other hand, since you can understand that this is a point of an overbought stochastic with prices fighting to get up to the previous high level and might not make it, this would be a good place to trade to the downside. And ultimately it was. So that's how you use price action. There are so many ways to look at price action. Many people talk about it. A lot of people don't understand it, don't know what to look for. Don't know what to look for. And what you have to learn, and what I teach in my course, and I don't want to hawk my course, but what I teach in my course is looking at the trade setups because they are indications of price action. And so you have to gauge the prices at particular points in time over the course of the trading session and ask yourself, does price action indicate a trade? So that's my video for today. Thanks so much for watching. Marv Eisen from Timeless Dollar Trading Academy. Trade safely, use lots of patience, and I'll see you in my next video.